The C Corporation net operating loss rules have gotten significantly more complicated than they used to be. So I thought it would be helpful for us to do a video about the net operating loss rules for C corporations. So I'm going to make this a bit bigger. So I'm going to read through the verbiage and explain generally what it means. And then I've got some examples that we'll work through as part of this recording as well. All right, so let's look at this first set of verbiage right here. And I got to change I'm going to erase a little bit. There we go. All right, so first of all, let's look at this little bit of verbiage, okay? So for C corporations with net operating loss carryovers incurred in 2017 and before, all right? So these are the rules that were in existence prior to the Tax Cuts and Jobs Act, all right? So for those NOLs, they can be carried back for 2 years, or they could be carried forward for 20 years. And when you carried them forward, you could offset 100% of taxable income in those years. All right? So you had the ability to offset 100% of the taxable income for those NOLs, for NOLs that were in existence before 2017 and then in 2017. So this was prior to the Tax Cuts and Jobs Act. Now, the next group of net operating loss years we need to be concerned about are right here, okay? So now you have the CARES Act years. So the CARES Act came after the Tax Cuts and Jobs Act, and the CARES Act came as a result of COVID and the desire to help businesses through the COVID years and to try to minimize the long-term impact of COVID. All right, so now we've got net operating losses incurred in 2018, 2019, and 2020, okay? So for those net operating losses, you had special rules, okay? You could carry them back for 5 years, all right? And if you carried them back for 5 years, you had to carry them all the way back for 5 years. You couldn't carry them back for 2 and then forward for some. You had to carry them back for 5, okay? Or they could be carried forward, carried over indefinitely. And this is kind of the cool part, but also confusing. They could offset 100% of taxable income if they were carried back, or if they were used in 2018, 2019, or 2020. So what that means is for net operating losses that were generated in 18, 19, or 20, if you were carrying them back or carrying them forward, they could offset 100% of your income. Okay, so kind of similar to the pre-Tax Cuts and Jobs Act rules. Now, it gets a little bit more confusing because now we're post-COVID, all right? I'm going to move this around so we can see it a little better. Okay, so now we're post-COVID, and so C corporations with net operating losses incurred in 2018, 2019, 2020, and after, okay? So for the net operating losses generated in those years, if they weren't completely used up in 2018, 2019, or 2020, then that net operating loss after 2020 can only offset up to 80% of the taxable income remaining. Okay, so say for example you had a 2018 net operating loss. So let's say you had a net operating loss generated in 2018, okay? And let's say that net operating loss was $50,000, okay? If in 2019 you had taxable income of $50,000, you could use this 2018 net operating loss. You could carry it forward and offset 100% of that 2019 taxable income with that 2018 net operating loss. That is something that could have happened. All right? But let's say instead of having a net operating loss of $50,000 generated in 2018, let's say you generated $150,000 of net operating loss in 2018. And then in 2019, you had $50,000 of income, and so you can offset that 100%. And then let's say in 2020, you have neither income nor loss, all right? So what do you have left over? Well, you still have $100,000 of net operating loss left over from 2018. You've not used it all up in 2019 or 2020. So then when you get to 2021, say you had $100,000 of net income. Well, that's great. And you're thinking, oh, cool. I've got $100,000 of net operating loss that I can carry forward and I can reduce my income. Well, yes, except because you didn't use all of that net operating loss from 2018 prior to 2021, now it goes back to the limited rules. So now the most that you can offset is 80%. So you can use $80,000, okay, of that net operating loss, but you're still going to have $20,000 of taxable income in 2021. And then also, you're still going to have $20,000 of a net operating loss to carry forward past 2021. Okay, so that is the meaning behind all of that somewhat convoluted verbiage. So let's look at a couple of examples. So I'm going to roll to the next slide. All right, so here is our first example. Oops, I got to get this sized properly. So here's a great multiple choice question. Which of the following statements is true for a C corporation incurring a net operating loss for a tax year that begins in 2022? Okay, so we have to figure out which one of these is true. So we've got A, it may carry the net operating loss back 2 years and forward 20 years. Well, that is not accurate. Those are the rules related to net operating losses generated in 2017 and before. All right. So then we have B. It may not carry the net operating loss back to prior years, but it may carry it forward up to 20 years. Well, that's not correct ever, because now they get to carry net operating losses forward indefinitely. C, it may not carry the net operating loss back to prior years, but it can carry the loss forward indefinitely. Okay, so let's look at that one. So we've got a net operating loss that begins in 2022, okay? And so that would be that third set of verbiage. And so for C corporations with net operating losses incurred after 2020 specifically, they can offset up to 80% of taxable income, and they can carry forward indefinitely, but they cannot carry back. So C is a great answer, okay? So the answer to this question is C. All right, I'm going to move forward to the next one. All right, so this question is similar, but we need to read it carefully and recognize that it's asking us something a little bit different. So which of the following statements is true for a C corporation incurring a net operating loss for a tax year that begins in 2022? Okay, so again, we're dealing with this newest set of legislation regarding net operating losses. Okay, so choice A says it may carry the net operating loss back up to 5 years. Well, we know that currently net operating losses for tax years that begin in 2022 cannot be carried back. So we know that's wrong. It may carry the net operating loss forward up to 20 years. Well, now they can carry them forward indefinitely. So we know that's not correct. It may offset 100% of the taxable income after the net operating loss deduction allowed for net operating loss carryovers from prior years. That is not correct. Remember that prior to 2017 and prior, you could offset 100% of taxable income. And during those COVID provision years, 2018, 2019, 2020, you could offset 100% of taxable income, but that's not 2022. And then we have D. D is where it gets really, really important to read what's going on. And D, as it turns out, is the correct answer. So we're going to circle D. It may offset 80% of the taxable income after the NOL deduction allowed for NOL carryovers from prior years. Okay? So what that's saying is, even after you offset prior NOL deductions, you can only offset 80% of the taxable income, okay? So even from prior years, you're only able to offset 80% of the taxable income. I went one too far. There we go. All right. So now this statement is asking us which of the following is false regarding a C corporation that incurred a net operating loss for a tax year beginning before 2018. All right, so let's start down at the bottom. We'll skip none of these, okay? So, and again, if you chose none of these, remember this is asking for what's false. If you choose none of these, then you believe all of these responses are true. So let's look at C. So it may carry the net operating loss back 2 years and offset up to 100% of the taxable income before the NOL deduction in those years. So which of the following statements is false? Okay. So what do we know about those pre-Tax Cuts and Jobs Act years? Well, you could carry it back 2 years and you could offset 100%. So that is not false. That is a true statement. So I'm going to write a little T next to that. So now let's look at B. It may carry the net operating loss forward for up to 20 years and offset up to 100% of the taxable income before the net operating loss deductions in those years. So is that false? Well, no. Remember, you could carry your net operating loss forward up to 20 years. It was not indefinite. It was up to 20 years. So that is also true. And now let's look at A. If it carries the net operating loss, if it carries back the net operating loss and or carries it forward, it may offset up to 80% of the taxable income in those years. Well, we know that C cannot be true and A cannot be true at the same time. Okay, and remember, we're talking about pre-Tax Cuts and Jobs Act, so that would make A false. And remember, this is asking us for which one is false. So that makes A the correct answer. Okay, so next I have 2 free response questions, and so let's look at those. All right, so these are the 2 free response questions, and I'm going to resize this and move things around just a little bit. There we go. All right, so let's talk about the first one first. So in 2022, BYC Corporation, a C corporation, had a net operating loss carryover from 2017, so that's critical, in the amount of $40,000. How much tax? So again, we're asking how much tax will they pay for 2022 if it reports taxable income from operations of $35,000 in 2022 before the NOL deduction? Okay, so we've got some critical timing issues. Our net operating loss came from 2017, and we know that 2017 NOLs you can carry forward years or back to and offset 100% of taxable income. Okay, so we've got a $40,000 NOL. So taxable income before our NOL, and I'm going to change colors here. I should have changed colors a minute ago, is $35,000. Our net operating loss carry forward can be $35,000. Okay. We had a $40,000 NOL. We can offset 100% of that. All right. So our new taxable income is 0. The question asks us for tax paid is also $0. But what the question doesn't ask us is, what is our NOL carry forward for 2023? So I'm running out of colors, so I'll stick with black. So I'm going to carve out a little space here. So what do we have left in our net operating loss? Well, we started out with a $40,000 net operating loss. We used $35,000 of it. So we have $5,000 net operating loss carry forward to use in the future indefinitely as we can. All right, so that's the first of those questions. Now, we're going to look at the second of these questions, and it's very similar to the first. We've just changed some dates. Okay? So, again, in 2022, BYC Corporation has an NOL carryover, but now, remember in our previous year, or our previous problem rather, it was 2017. Now, it's 2018 in the amount of $40,000. So we still have a $40,000 net operating loss carry forward. How much tax will BYC pay for 2022 if it reports taxable income from operations of, again, $35,000 in 2022? All right. So the only thing that has changed is the year, the tax year that generates the net operating loss. But as a result of that 1 year difference, our calculation changes considerably. All right. So our net operating loss from 2018 was $40,000. Our taxable income before any net operating loss deduction is $35,000. But because this net operating loss came from 2018, it can only offset 80% of our income. So we're going to multiply our 35,000 by 80%. So when we multiply 35,000 by 80%, we get 28,000. That 28,000 is the amount that can be offset. Okay, so we can offset that So if we take that 28,000 from 35,000, we end up with 7,000. Let me change colors here. Of taxable income, all right? But remember, our problem asks us how much tax will we pay? So we take that 7,000 by 21% because that is our corporate tax rate. So 7,000 times 0.21 So we pay $1,470 in taxes, all right? And what do we have? So now we've got over here, remember, we've still got our NOL from 2018. Well, we just used up 28,000 of it. But what does that give us? That gives us $12,000 of an NOL remaining. And that can be carried forward indefinitely. Okay, so hopefully that makes the complex world of corporate net operating losses a little more clear.